September 30th, 2024. The whole day, you could make an argument. It's essentially an expanding triangle. It's kind of a looser definition of the day, but essentially we had Jerome Powell spoke at 2, and we got a big sell-off, which ended up being a vacuum test, and then we got a large reversal up. And imagine it was a vacuum test of one of these higher lows. Yeah, so that one. So when you're in a bull channel, every higher low is going to be support, and when you're in a bear channel, every lower high is going to be resistance. These lower highs, you can see we got over here. So you can see we ended up around this higher low and bull spot. Bar 1, a bull bar closing somewhat near its high. There's a big tail on the top. It's a failed breakout below yesterday's low, and yesterday's low is going to be important on this day. Yesterday's low is always important, but I thought today it would be especially important because today this was a third reversal down, and it was an inside bar, so it was theoretically a credible sell below the September 27th bar for a swing, meaning it probably wasn't going to get good follow through. But you had to keep in mind that there was real risk of a sell off today, but probably not high probability. Bar 2, a bull bar, but a tail on the top, so probably buyers below, and but probably also going at least a little bit lower. If you buy below 2, you can't really put a stop below 1, because the reality is you need to buy more if we do go below 1. Most of the traders who are willing to buy below 2 are doing so for a scalp, maybe back up, trying to get back up into the upper third of bar 2. So trying to get basically back up in this area. You can see we got one tick past the upper third on 5 before reversing down. So the traders popped below and scalped out in the upper third. So buyers below 2 during 3. 3 is the bears are hoping that 2 is the high of the day, and 1 and 2 is a bull trap, and that we're going to start to sell off. But that's really not all that likely. I'm probably going to go a little bit more sideways here before we do anything else. 4, an inside bar, so it's a high one for the bulls. However, I would imagine that there's probably sellers not too far above. Bulls are hoping this is a bull trend, and now we're getting a good high 1 here. However, you don't really want to buy a high 1 in this context. It's not a strong bull trend. Bars 1 and 2 are not overly convincing that we've started a bull trend, so there's probably going to be more sellers above. An outside down bar, 5, a bear bar, but a big tail on the bottom and a tail on the top as well. It's really not worth selling. I think that we're probably just more in a tight trading range, bars 2 through 5. So I'd probably rather wait until we get a strong breakout below 1. Do you buy above 1? I probably wouldn't, but it's the most credible up to bar 5. It's for the most credible stop entry of the day is buying above 1 and putting a stop below 1 and taking a chance it's the low of the day. Again, it's not a very good trade, but some traders might do it. So you do have to keep in mind that there are stop order bulls that are doing that. But you can literally see it happened today as a perfect example of the problem of doing that is that there's going to be more buyers below bar 1 than there's going to be sellers. 6 consecutive bear bars, 5, 6. Do you sell below 6? I don't know, maybe for a swing, but your risk is kind of big. You're risking above bar 2, and the probability is not all that great yet. So big risk and not great probability. It's probably better just to wait and see what we get for follow through. Bar 7 is disappointing follow through. So if you sold below 6 and you got 7 as follow through, you probably are not all that thrilled with it. Big tail on the top, so not really that great for the bulls to be buying, but the bears were unable to get a bear close, so a lot of the bears are not going to be all that interested in selling. So kind of stuck on the sidelines for most traders here. 8 sells off back to the close of bar 6, and then bears buy it back shorts, and that's what causes the rally on bar 8. Tail on the top, so sellers above 7 most likely, as you can see here. To me, what do I see? Bulls are hoping that this is a double bottom, 7, 1, and that this is a possible low of the day. But it's really not all that great. There's probably going to be sellers, or there's probably going to be sellers somewhere not too far above. There's also probably going to be buyers not too far below. 9, an inside bar, a bear bar closing near its low. You sell below 9, it's possibly 3 legs down. 1, pullback, 2, pullback, 3. So that's the argument for not being interested in selling below 9 is 3 pushes down. However, you also have to keep in mind that it's early in the day and we could get an opening swing. So 9 is the most credible sell that we have so far today because you'd be keeping in line with the bear channel and taking a chance that we're going to end up basically breaking out below and continuing to stay below the moving average since we have not gone above the moving average yet today. So if you're selling here, you're taking a chance that we basically collapse to the downside at some point. The first thing you need to do is get a close below the bar one low. So if you took the short, you're really interested in getting a close below the bar one low pretty quickly here. Bar 10, another bear bar, consecutive bear bars. To me, it still looks like it's going to be some sort of wedge pullback. So this was a lower low double bottom where the second leg was a wedge, and that's a pretty reliable pattern. It's some sort of double bottom where the second leg's a wedge, or some sort of double top where the second leg's a wedge. You could argue this was a big wedge, 1, 2, 3, and a double top over here. 11, another bear bar, but a large tail on the top. So 9, 10, 11, 3 straight bear bars. However, on the second and third bear bar, we've only covered 2 or 3 bars of distance. So really not as great as it could be. So as I was mentioning, bars 10 and 11 are follow through, but there's a lot of tails, and you can see 11 has so much overlap with 10, so it's really not worth it to be selling below 11. If you are selling, it's the same as selling below 9. The same premise that you're going to get a strong breakout below the bar one low. And this looks more like a trading range, and it's looking more and more like a third leg down with every bar. And then you get a bull surprise outside up bar on 12, a bull bar closing near its high. You can buy above bar 12. It's a wedge pullback. Potentially buy above it for at least a couple of legs sideways to up. Reasonable to take a chance that we rally. It's a possible low of the day. So I'd say 60% chance you're going to get at least 2 legs sideways to up, and 40% chance that it's the low of the day. That's reasonable math. However, 9, 10, and 11, it's 3 straight bear bars. So we might have to get some sort of pullback before we rally when you get 3 straight bear bars. 13, another bull bar, but a tail on the top. So still bullish and probably still always in long, but not quite as bullish as it could be. 14, another bull bar, a big tail on the top and a tail on the bottom as well. 3 straight bull bars, you can see 12, 13, 14, but I'm not, it's not overly convincing, right? So if this was truly going to be the low of the day and we were going to get a huge swing up, it probably would have been better had 13 and 14 been good looking bull bars, closing near their highs, bars like 12 for, to increase the chances of a really large rally. We're not getting that on 13 and 14. We're probably still going higher, but this is a warning that we might pull back soon. 15, a bear bar, an inside bar. It's a low one short for the bears. They think it's some sort of double top, bar 2 and bar 14. Probably sellers not too far above, and probably buyers not too far below if we go there. Now you can see inside bar high 1 for the bulls, and then we got sellers above during 16. High 1s generally lead to deeper pullbacks and then follow through. So you can see we're probably going to get a deeper pullback as we do here, and then we got another rally. It's possible, some bulls would have their stop below 14 at this point. It's probably not that great to have it there yet, but you could, in theory, argue that 12 and 13 is the spike, and then you got a pullback with the tail on 14. So this is now a bull channel. And if it is a bull channel, we shouldn't fall below the low of the channel, which would be the bar 14 low. So I believe I was on 17 trades below 16. You get buyers below 16 during 17, but just looks like 2 legs sideways to down for me. 15 pullback, 17, 2 legs sideways to down. Buyers below 17 during 18, and buyers on the moving average, and then another bull bar closing near its high on 19. However, 19 kind of has the same problem that we've had down here, and that 19 is unable to close above the 16 high. So we do get a breakout, but it's not really able to close strongly above the breakout point. So I think it's a little bit disappointing. 20, a bear bar closing near its low. However, 20 has the exact same issue. Look at the 15 low and the 18 low. The 20 low is on the 15 and 18 low today. And every single time that we've closed on the low and haven't broken out of it today, bar 11 and bar 19, every single time we've done that, it's failed and we've gotten a reversal. So 20 is not really that good of sell, even though it is 3 pushes up. Probably buyers below 20. You can see we did get buyers below 20 during 21, a bull bar closing near its high, however, still unable to break out. We rallied to a new high on 22, but found sellers at that high. Probably buyers not too far below. 23, an inside bar, probably buyers below the bull bar, I would imagine. You can see buyers below during 24. It's not really a very good short, even though it is a wedge. And then surprise bar down on 25. I think this is where bulls exit. I don't think you have to exit if you're a bull on bar 20, because the market is usually going to try to trap you out before it goes your direction. So I don't think you necessarily have to exit below 25. You have to exit below 20. However, 25, you probably have to exit. The bar is a little bit smaller, and it's a little bit higher, so the risk reward is a little bit better for the bears. And it's 3 pushes up, so the probability might be reasonably decent for at least a scalp. We also have an open gap with the bar 11 high and the bar 13 low. So you have to imagine that there's going to be buyers down here if we get to this area, which you can see that's initially where the bulls stepped in. So the sell-off ended up just being a vacuum test of this gap and closed the gap. This gap being closed decreased the chances of the leg up lasting, a lot longer. So that's why we ended up failing up in this area, or one of the reasons. 26 consecutive bear bars. It's probably sell to close. I think you can probably sell 26, but it has the same problem in that it does not close below the bar 21 low, which is the breakout point. It closes at the low, not below it. So I think that's a little bit disappointing. And if you're selling 26, you're selling the exact middle tick of the trading range. So it's really not as good as it could be because your risk is reasonably big and it's having you sell the exact middle tick of a trading range. Granted, the market does usually break out around bar 30 if you're in a trading range for most of the day up until that point, but that's not a good enough reason, I don't think. 27, a bull bar, but a big tail on the top and on the bottom, so not really worth it. So like I was mentioning, 27, vacuum test of this area, possibly a bear trap, 25, 26, and now a reversal up. However, there is a big tail on the top of 27, so not really worth buying. It's also a big bar, big risk in an area where it's really not all that great. Consecutive bull bars, 27, 28. We're getting a rally back up towards the open of bar 25, the sell climax high, but probably going to be sellers above the new high of the day. You can see we got a couple of failed attempts to break out above the 18 bar range on 22, now 25 as well, but looks like we're going to try and do it again. 29, a doji bar, probably buyers not too far below, probably sellers not too far above. And then 30, another bull bar, but again, look at the momentum here. It's really not all that great. So this whole thing, the rally from 1 to 30 looks like a bull leg in the trading range. I think that's the thing to remember here. And if you're going to get a bull leg in a trading range, what usually comes sometime after that? That would be a bear leg in a trading range. 31, another bull bar closing near its high, but probably sellers at the new high if we do get there. 32, another bull bar, but massive tail on the top. So it's really tough to want to buy the close of 32. You can see buyers below 32 during 33, and a lot of them are probably scalping out in the upper third of bar 32. So, you buy below and you get a quick move, you scalp out with 5 points during 33. 34, a bear bar closing near its low. It's 3 pushes up, and it's a really small bar with really small risk. It's an IOI pattern, which is a breakout mode pattern. So it's reasonable to sell below bar 34 with a stop below or above bar 33, the high of the day. 35 trades above 34 and finds sellers. Some traders selling above 34, stop above 33, only risking a tick, knowing it's possible they make 10 to 12 points. They usually won't, but this is one of those cases where they did. So good for the bears that we got sellers above 30, 34. Some other traders don't want to take that low probability trade, so they'll be willing to scale in higher. 35, a bear bar, but a doji bar. So it is follow through for the bears, but it's probably not as great as it could be. 36, consecutive doji bars, 35, 36. So it's follow through, but it's really not all that great a follow through. It's not that surprising that we're getting sideways to down follow through instead of directly down follow through, because a lot of the traders, people don't sell immediately in trading ranges. They're going to start adding to their positions. And a lot of times trading ranges, especially with this many bull bars, this tight of a bull channel to the upside, it's going to move a little bit slower to the downside. 37, another bear bar, probably sellers above 37 if we get there. 4 straight bear bars, so you're going to get a second leg sideways to down. What are we testing here? We're testing the 33 low, which is a higher low, so a support point. And we might test back down to around the 27 low, which is the next place that's a higher low and a support point. You could argue the 29 low is a higher low, but I think it's easier to just go by the actual points. So it's possible that this is just a big trading range. Right. Oops. 39, a bear bar closing near its low, triggers the low one short below 38. Bulls are hoping it's just a second leg sideways to down. 40, a bull bar, probably sellers not too far above, probably buyers not too far below. So 41, a bear bar closing somewhat near its low, but tail on the top, tail on the bottom. We're probably going to get a third leg down. We have 2 legs down. First 4 bars to our 37 is 1 leg, 39 is second leg. And it looks like 41 is the start of the third leg. So the question becomes, how far down does the third leg go? 42, an inside bar, a low one short for the Bears, but hard to sell a third leg down in a trading range. 43, another bear close, but big tail or a tail. 33, 43, so probably not again as good as it could be. 44, a bear bar, a bear doji bar. So we have a lot of doji bars in this sell-off, telling you it's probably a minor reversal down. And then a collapse below the bear channel. So the bear channel is from bars 34 to 44, and then a collapse below it on 45. Probably buyers not too far below. You can see traders buying back shorts around the close of 45. And that's what's causing 46. So 47, a bull bar, but a tail on the top. So probably buyers below 47, scaling in lower. So you'd imagine bulls probably more interested in buying the close of 45 during 48, 49 than they are in buying the close of 47. 48, a bear bar closing near the low. The bears are hoping that this is a pullback, and now we're going to get a breakout below these three legs down, but probably better to make the bears prove it before you take anything. If you're selling the 48 close, you're essentially selling the same tick that's the first test of the bar 45 close. And the bears who sold the bar 45 close scaled in, probably not thrilled with how 46 and 47 look. So it's not great to sell below 48. And even worse, if you do sell below 48, you're probably going to have to use a wide stop. It needs to be probably at least above, the second most recent leg. So it probably needs to be at least above here, maybe even up here. You need to be selling more up here, because a lot of times trading ranges will trap you in and they'll run the skunk stop and then come back to your entry price. So if you're selling here, you need to be using a wide stop. Disappointment 49, not that surprising. If you sold 48, you're hoping for a good follow through. You got disappointment 49. And then I would stop trading until the announcement. So I'll skip to that. But it's technically, I suppose, a parabolic wedge. 1, pullback, 2, pullback, 3. So it's wedge in a lower time frame. An inside bar 55. Excuse me. An inside bar 55. So it's an IOI pattern. Probably buyers somewhere below, scaling in, but dangerous to be trading because there's a lot of sharp. It's essentially a new open of the day, so there's a lot of sharp reversals. 56, another bear bar, but a big tail on the bottom. Probably traders buying, somewhere below, lower. There were a couple of measured moves today. Whenever you get a tight opening range like we got, you usually get a measured move up or down. Today it was down. And then we got a big reversal up, and we got a measured move of the whole leg up from this low to this high up. So we got all the way up here. 57, a big bear bar closing near its low, but we're essentially at the low of the day. Probably going to be traders initially buying, scaling it lower, but I don't think it's great to sell below 57. It's probably better. It is a surprise, and it's 3 straight bear bars, so we're probably going at least a little bit lower. But you might have to be a little bit cautious and wait for follow through, which you do get a big follow through bar on 58 consecutive bear bars. It's possible that this is still a trading range day, and if it is, we'll get back to the bar 12 low. 59, 3 straight bear bars that are really large, so 5 straight total bear closes and a strong breakout, but a big tail on the bottom. 59, you can see it's about 10 points. The bears who sold below were able to scalp out below 58, were able to scalp out with 10 points, and a lot of them did. And that's part of what's causing 60. 60 is, usually probably a minor reversal, but it's a possible bear trap. And if it is a bear trap, we could test all the way back up to the sell climax high, the bar 57 high, and test all the way back up through the bar 12 low, which is the place where the bulls initially bought, and they're buying lower. 61, follow through consecutive bull bars, a tail on the top and a tail on the bottom. It's possible 61 is the second leg down for the bears, but usually you'll get a better second leg than that. 62, another bull bar. So 3 straight bull bars, not looking good for the bears who shorted. And then 63, 4 straight bull bars, so a bit more by the close. This now should get a second leg up, so even if we pull back, imagine we're probably going higher. 64, a doji bar, probably buyers not too far below, probably sellers not too far above. And you can see buyers below 65. We're probably going to get a pullback here, which we do, but again, we're still most likely going higher. 66, a bear bar, but not really worth selling below for the double top because of the buy climax. It's a little bit too strong, a little bit too many bars. You can see initially buyers below 66 during 67 and a huge tail closing this gap. 67, a bear bar, probably sellers above the high one initially, but still always in long. You can see initially sellers above during 68, and then buyers below 69, and then we got an II pattern here, 72, So if you bought for any reason here and you decided to hold, it's reasonable to hold, taking a chance we get a second leg up. You don't know when it's going to come or what it's going to look like. Or you can just wait. You can get up below 66 and wait for another bull bar closing near high like 72 and just take the buy above that and hold that for a swing. For stop orders, 12 was reasonable. I thought 9 was probably okay, but not great. I thought 12 was reasonable. I thought you could probably sell 25. 34 made sense. You could probably buy 31, but it's not like great. So you could sell up here. It gets tough to want to sell any of this though. You could probably sell the close 58, 59. You could probably buy above 60. Or if you don't buy the close 63, maybe, then you could buy above here, and this just becomes a buy the close finish. Daily chart, almost outside up. It was, a point or two away from being an outside up day. Disappointing follow through for the bears who sold below here. The reality is, if you sell below this low, if you scale in higher, you're going to be able to make money. So we'll probably come back to this price at some point. The monthly chart. So this was the final day of the month, which was probably a peak part of what it was affecting. But that's a good looking bull bar. So as much as we did pull back and we're starting to get big tails, and you can see how strong this was. This looks a little worse, but you still have to keep in mind, I think 6,000 this is way past 6,000 obviously, but I still think 6,000 is the target. I do think we're going to 6,000 probably, pretty soon, probably next month. I wouldn't be surprised at all if we went to 6,000, just because we're getting so close to it that we probably have to finish up the test. So I do think that's the target over, the next month or so. And no real sign of a pullback. We got a pretty deep pullback here, but a sharp reversal back up to the all-time high. So I do think we will eventually hit 6,000 some point this next month. I don't know if it'll be immediately, but bulls, you can see the momentum is waning a little bit. Tails, so not going up as quickly as it could. However, I still think we're going to get up to this point. It's just a question of, do we pull back and then go, or do we go straight up? And obviously, I do think saying that, it's a good looking bull signal bar on the monthly chart. So I think we're going above this month's high. I don't know when, but I do think pretty likely we're going above it. All right. That's going to be it.